For 10 years, a ghost has haunted the crypto market. A ghost holding over 140,000 Bitcoin, a treasure chest from a bygone era, waiting to be unlocked and unleashed upon an unsuspecting market. This week, that ghost came back to life. The Mt. Gox trustee announced that the decade-long wait is over. Repayments are finally beginning in July. This single event threatens to flood the market with a wave of selling pressure not seen in years, and fear is palpable in the air. But is this the catalyst that ends the bull run, or is it the final brutal cleansing the market desperately needs before its next explosive move? The answer lies buried in the data they don't want you to see. So in the next few minutes, we will confront this ghost and uncover the truth. Let's begin with the story that is dominating every headline, the return of Mt. Gox. For those new to the space, Mt. Gox was once the world's largest Bitcoin exchange, handling over 70% of all transactions. In 2014, it collapsed after a catastrophic hack, locking up the funds of thousands of early adopters. For a decade, those creditors have been fighting in bankruptcy courts to get their Bitcoin back. Now, the trustee has officially confirmed that repayments in Bitcoin and Bitcoin Cash will finally begin in July. We are talking about approximately 142,000 Bitcoin, valued at over $9 billion, being returned to people who acquired them for under $500 per coin. The temptation for these early creditors to sell even a fraction of their holdings for life-altering, multi-million-dollar profits will be immense. This is, without a doubt, the largest, most anticipated, and most feared selling event on the crypto calendar. The market is bracing for impact as this supply bomb threatens to overwhelm any existing demand. This fear from crypto's past is being amplified by the failures of its present. This week, we saw another ghost appear, this time from the 2021 bull run. Aptos Foundation, a once hyped Layer 1 blockchain that raised hundreds of millions of dollars from top-tier venture capitalists, announced that it is ceasing development and dissolving its foundation. This is a stark reminder of the brutal reality of the crypto market cycle. The vast majority of projects, even those backed by the biggest names and an avalanche of cash, will fail to gain traction, run out of money, and quietly fade into obscurity. This creates a graveyard of failed ETH killers, reinforcing the risk-off sentiment and reminding investors that outside of a few blue-chip assets, this space is incredibly unforgiving. The chilling effect is even being felt in the market's hottest sector. The AI token narrative, which produced spectacular gains earlier this year, is now facing a brutal correction. Coins like Fetch.ai, SingularityNet, and Render are down 30 to 40% from their recent highs. This has sparked a fierce debate. Was the AI crypto narrative just a hype-fueled bubble riding on the coattails of NVIDIA's success with little substance to back it up? Or is this a necessary and healthy cooldown, a brutal shakeout of speculators that allows the truly innovative projects, those genuinely merging AI and decentralized computing, to solidify their foundations before the next wave of interest arrives? The long-term convergence of these two technologies seems inevitable, but the short-term price action is testing the conviction of even the most dedicated believers. With all this fear from the past and present, it would be easy to assume the market is on the verge of collapse. But that is when we must turn off the news and look at the data. Let's look at a key on-chain metric called the MVRV Z-score. In simple terms, this tool measures if Bitcoin's price is fair, overheated, or undervalued compared to its own historical trends. During the March all-time high, this score was in the red, overheated zone, indicating speculative froth. Today, after months of correction, the MVRV score has fallen dramatically back into the neutral zone. What does this tell us? It signals that the excessive speculation and euphoria from earlier this year has completely wiped out. The market has fundamentally reset. While this doesn't prevent further downside, especially with the MT Gox pressure, it suggests that we are much closer to a foundation for future growth than we are to a speculative top. The market is, fundamentally, much healthier than it was a few months ago. And there is another piece of data that supports this thesis, and it comes from the slowest, most conservative corner of the financial world. This week, filings revealed that the Ontario Teachers' Pension Plan, one of Canada's largest pension funds managing over $250 billion, has made a significant allocation to a spot Bitcoin ETF. This is fundamentally different from the recent ETF outflows driven by fast-moving hedge funds. Pension funds are the ultimate long-term investors. They have 100-year outlooks. Their decision to enter the market is not based on short-term sentiment, but on a deep, structural belief in Bitcoin's future role as a store of value and a portfolio diversifier. While one ghost from the past threatens to sell, a new giant from the future has quietly started buying. So, we are left with a market defined by an epic conflict. A ghost from crypto's past is threatening to flood the market with a supply shock born of fear and profit-taking. Recent hype cycles, like AI, are cooling off, and failed projects remind us of the immense risk. But underneath it all, the on-chain data shows the market has already been cleansed of its speculative excess. And the world's largest and most conservative institutions, the pension funds, are just beginning their methodical long-term accumulation. The market is about to face its biggest test yet. Can the new, slow and steady institutional demand absorb the fear generated by the ghosts of crypto's past? The answer to that question will define the rest of this year and beyond. If this deep dive helped you see beyond the headlines and understand the conflicting forces at play, please help us grow this channel. Like this video, comment below with your thoughts on the MT Gox situation, and share this video with a friend who needs to see the bigger picture. Be sure to subscribe and hit the notification bell for more analysis that cuts through the noise. Thank you for watching.